Traders, congratulations, you made it. You made it to the end of our supply and demand course, where hopefully now you have the tools to make an average of $1,000 a day trading the Forex market. I felt a little weird about recording this video because it makes it seem like everything is over and done with, but that's not the case. All right, we're just getting started with the content. In the coming weeks, we'll be putting out some market outlook reports, trade setups, and possibly a live signal group. All right, so more on that later. But ultimately, guys, I just want to say thank you, because nothing in this world is free, including our time. So the fact that you spent the time to work through this course, engage with the content, it really means a lot to me. So again, thank you for that. And lastly, guys, just the one thing I want to leave with you is this is just the beginning. Acquiring the knowledge is just the beginning. Right now, it's time to put in the time, put in the work, to practice on the charts, to perfect your entries and your exits. You know what to look for now, so you guys should be golden in the market. Okay, so as always, feel free to reach out with any questions. But again, never stop practicing, never stop learning. Okay, we'll see you soon. Happy trading. Good luck to you. Peace. Traders, what is good? We are here. It's Cole with Free Trading Academy. We're talking how to trade with other people's money and how to keep most of it from the tax man. Guys, I'm excited. This is a video that I have been wanting to make for a while. Obviously, it just didn't make sense to do it early on in the course. Now that we have talked about all the strategies and everything like that, now we actually put it into practice. Now it's time to go and open an account. It's time to go and raise some money, whatever you want to do. So this video is important, but for me, this really just changed the game. Once I was able to tap in with other people's money and bring that to the market and really just add to my positions, give me some more leverage, all that good stuff, man. It really just opened a whole lot of doors in terms of my trading career. So I hope it could do the same for you. I'm confident that it will. But most people lose because they don't have enough capital to trade. So this will solve that problem for a lot of you guys. All right, so let's dive in. All right, so there's really two options when you are trading with other people's money. The first is proprietary trading. The second are LLP funds. So prop trading, some of you guys may have heard of that. A prop firm is a firm that allows you to trade their capital in exchange for a profit split. There's also some regulations that you have to follow, rules that you need to follow, mainly just around risk management to keep their capital safe, which for those of you that are using these strategies and the risk management that you've learned in this course, that shouldn't be a problem. The second are LLP funds. So LLP funds are, kind of like the next step up from prop trading for those that are interested in a professional trading career. These are basically your hedge funds. Every hedge fund that you hear about started off here. You pool investors together, you pool their money. You're looking at high net worth individuals, which are, as the SEC defines, accredited or qualified investors, which are basically people who have a net worth of at least $200,000 and a certain amount in liquid assets as well. So those are the people who make up LLP funds. And, so we're just basically going to dive into both of these options. All right. So deep dive into the prop trading. So a prop firm is essentially a trading desk at a major financial institution. So you have a bank, you have, a large investment brokerage. They use prop firms' capital, or they fund these prop firms so that they could directly trade the market and make profits. So you have to think, if you put your money into a bank, Chase Bank, Wells Fargo, credit union, when you open up a savings account, they, usually offer some really, really crappy interest rate on your account, so that those dividends come by way of them investing in the bond market, them investing in, index funds, really low risk, low return, just something to say like, hey, here, we're doing something with your money. We're not losing it. But these banks, they also, they want to get in on the action too. So they know that Forex trading, commodities futures is a little bit more risky, but it's a lot more lucrative, right? So they fund these prop firms and they say, hey, go and trade a chunk of our capital, bring us back a nice return. Everybody's happy. Okay. So that's where it all starts. The way it trickles down to us is these prop firms go out and recruit professional traders who are able to be consistently profitable. And they say, hey, we'll give you X amount of money to trade. In exchange, we'll give you a profit split, excuse me. And then it's a win-win for everybody, right? So essentially, most of the capital that you're trading, or at least the capital that is funding these firms, they're coming from investment banks, hedge funds, and other brokerage firms who are looking to get a better return on their investment than the traditional bond yield and index appreciation. All right. Pros and cons. So the pros of prop firm trading: low startup costs. All right. You don't need to. There's no legal fees. There's nothing like that. You approach the firm. Most of them are have a website. You could go sign up. You'll do an evaluation, and the cost of that evaluation could be anywhere from $150 to $1,000, $1,500, depending on the size of the account that you would like to be evaluated on. All right. Another pro is that you could start off with smaller account sizes. So, if you wanted to start off with $10,000, you could do that. Some of you guys like $10,000, but in the prop trading world, that is a small account size. So we're going to get into why that's a good thing. There's also the quick entry into this market. So again, with forming a hedge fund where you're pooling investors together, there's great scalability in that. But the con is it takes a very long time to get that up and off the ground. So with this right here, it's a quick entry to market. In a matter of minutes, you could have a demo account sent to you that you could begin doing the evaluation process on. All right. And because it's a quick entry, you can build a fast track record of success. So if your ultimate goal is to start a large fund, then you could say, hey, I've traded consistently for this prop firm for a year, 2 years. Here's the returns that I've gotten. Do you want to invest in this fund that I'm starting? So it could definitely give you a nice track record in a short amount of time. The cons, to me, these aren't really huge cons, but there's still cons, I suppose, in comparison to everything else. There's a profit split, so obviously they have to make their money too. So if you make 10 grand in a month, some prop firms will take anywhere from 50 to 90%, or 50% they would take, or to 10%. So you would keep or take home 90%. That's the highest that I've found. Nobody obviously allows you to take 100, or else they wouldn't make any money. So, and then you can only scale so high. So most, we're going to get into my three favorite in the next few slides. But I know the 5%ers. That's about the highest that I've seen so far, where they could allow you to scale up to, I think, 1.2 million. They have a 50-50 profit split. Others, anywhere between $200,000 to $300,000 is the maximum amount. So if you really want to go big, then you can only go so big with some of these guys. So these are the top three, in my opinion. This could be debated, maybe one or two of them, but FTMO is definitely, I would say, the standard. They are. I'm not sure if they were actually the first in this space, but they definitely have carved out a role of efficiency, and they are trusted amongst the trading community. Nice user interface. Very easy sign-up process. Funding talent is relatively new, but in my opinion, they're the best option for new traders, and that is because they offer what is called a flex account. So that means that you could theoretically start making money from the very beginning. You don't have to pass an evaluation process or anything like that. You can trade, and a portion of your profits will be paid out to you as a talent bonus, and the remaining profits will be deposited into what is called an elite account. And once that elite account is topped up, then you will trade that full time and then have full access to all the profits that you make. So it's basically kind of like the best of both worlds. You're working towards having a fully funded account, but you're also able to make money while you're doing that. The 5%ers is another reputable firm. This is the one that I'd mentioned earlier. So these guys, they allow you to scale up to 1.2 million. It might be a little bit more to double check, but I know it's over $1 million. The only downside with the fivers is that you cannot trade indices or commodities. So for me, I don't really do too much of them anymore because my bread and butter is, the S&P 500, US 30, NASDAQ, gold, oil. I do trade the currency still, but that's all they offer are the currency pairs. So these are the top three. Let's click on FTMO. Let's see what. All right. So this is their homepage. All right. Pretty simple. Pretty user friendly. So, but this is basically what it is. I mean, it's a 3-step process. You sign up for the challenge. There's a 2-step challenge process. So you have the first step. Once you pass that, there's the verification step. After that, then you are now what is called a funded trader. So then you have now access to an account of live money that you could trade and profit from. So these are the options that they have down here. You could start off with a $10,000 balance, 25, 50, 100, 200. The cheapest one is the 10,000, obviously. So after the conversion, you'll be paying a little bit more. If you're a US client, you're paying a little bit more than 155 euros. But that's not bad. If you think about it, this is how I like to tell people, man, like if you are first starting off, in Forex, most people want to fund their account with $1,000 to $2,000. So at the very end, you could fund your account for about $200 of your own money, with, and have access to it, the $10,000 potentially account, so that's a lot of leverage to have in the market, a lot of buying power. The max that you could get off the jump with FTMO is 200,000. But once you prove yourself on this account, they do allow you to trade up to $400,000 in their funds. So a lot to be happy about there. Again, this is definitely an easy way to really level up your trading. So here's a couple of case studies. All right. So let's say you decided to go with FTMO. Okay. And you say, I want to do their $100,000 challenge, because if you pass that challenge, then now you'll have access to their $100,000 account. All right. So all you pay out of pocket is $640. So after the conversion, this is what you would pay if you're paying in US dollars. All right. So let's say you make 1% on average, 1% return a day. Okay. Which is very doable. It's about industry standard, I would say. So you make a 22% return in the first month that you go live. So at the end of that month, your net profit is gross profit is $22,000. Okay. FTMO takes their 30% because they do just a flat 70-30 profit split. So they take 30%, you take 70. So your take home, your net profit is $15,000 and 400. Excuse me. Yeah, I've got to trip myself up there. $15,000. All right, 400. That's your net take home, man. I mean, and all you really invested of your own money is $640. Like, that's wild. That is just the power, man, of this right here. It's important to get this down. All right. And it's worth it. It's definitely worth it. All right. So, and then I had mentioned earlier that they allow you to trade up to $400,000, right? So let's say you get up to that point, you're a few months in, you're doing pretty good on the 100, and you're able to access more capital. So, same return here. So 22%, 1% a day. All you're doing is just upping your lot sizes, but same entries, same risk management. All right. FTMO takes their 30%. Now look at your take home, 61,000, man. I mean, come on. We're talking about a month here, a month. All right. People are really getting paid out here, y'all. People are getting paid, and this is how they're doing it. They're trading other people's money. All right. So don't sleep on this. Go check out these prop firms. Let me go back. Go check out these prop firms, man. I mean, one of these will definitely, all these will do it for you, but some of you guys might have some, some things in particular that you're looking for. But man, you will make some good, trust me, you'll make some good money doing this right here. All right. So the second form of pooling money together is through an LLP fund. So I put this one second because naturally that's the progression of things. There are very few people that are able to like break into this hedge fund world right off the jump, especially after like intro to forex. So you definitely want to build up a good track record. You also want to be networking. If this is something you want to do, you want to be that type of person that's passing out business cards, collecting business cards, because eventually you're going to have to be calling a lot of people to raise this money. All right. But the pros about starting a fund is that it's unlimited in its scalability. So the prop firm, like with FTMO, for example, the most you could trade is $400,000. Now we saw in that case study, you could make a whole lot of money trading $400,000. So that's not anything to scoff at, but still, you're capped out. All right. With the LLP fund, you could raise as much money as you want. I mean, you could get into the millions, the hundreds of millions, the billions. Just research hedge funds on Wall Street and look at their balance sheets and how much capital they are managing at any given time. It's crazy. So because of that, you virtually have kind of like an uncapped earning potential. There's a typo in there. It should say virtually uncapped earning potential. But yeah, you could theoretically make as much money as you want. The cons, so to start an LLP, you can't just go on LegalZoom or anything and do that. This is a very labor-intensive process, a lot of paperwork. So to prepare and file what is called an LPA and PPM, these are essentially your governing documents that will tell your investors what you're investing in, protocols, all that stuff. They're two very thick documents, so again, it's not anything that you could do overnight. And in most cases, you'll need, a lawyer familiar with SEC law to prepare and then go ahead and file these for you. So to do all that, the costs range from $30,000 to $50,000. So again, most traders just starting out, might have a few $1,000s that they're, willing to either fund an account with or, go and sign up with a prop firm. Right. So that is just probably the main reason why it's untenable for a lot of people just starting out. And then secondly, for some people it's a con, for others it's just, working their contacts depending on who but you have to go out and find accredited or qualified investors. So with a fund, you can only take so many people who are not accredited investors. So if you're thinking like, oh, I'm going to call my mom, I'm going to call my auntie, my grandma, like you can only take so many of those people unless those people have a net worth of at least $200,000. Okay, then they would qualify, and then you could bring them in. So for some folks, just having access to those types of people could be difficult. Right. So that would be a con. All right. So a fund structure is made up of what is called the general partnership. So the general partner is you and whoever else is running the fund. Maybe it's you and another person who is trading stocks and another person who is investing in bonds, and you trade Forex. And together, you guys collectively form this hedge fund. So you three would be the general partnership. All right. And then you have the limited partners, and these are the investors. All right. So these are the people that you go out and you pitch to. You say, hey, we're starting this fund. Here's our track record over the past year. Here's the returns that we could give you. Do you want to invest in our fund? All right. So from there, the general partner controls the investment strategy, and they decide on the waterfall structure, which is essentially, just investor language for how you're going to pay out your investors. So what's the profit split? What percentage marks are we aiming for? And if we get a certain percentage, what's the split then? So normally investors, who invest in funds, they get an 8% pref or preferred return. So that means that of all the profits that you make in a month, in a quarter, however you want to do it, the first 8% of the profits that come in get paid to the investors. So before you get paid, they get paid first. So that's why it's called preferred return. All right. Everything over 10% is split in some manner between the GP and the LP. So sometimes it's between 10 to 19%. It's a 80-20 split in favor of the limited partnership. And then anything over 20%, it's a 50-50. Sometimes it's, hey, anything over 10%, we're just splitting right down the middle. So it's your fund. You could structure it how you want, but that's generally the rule of thumb how it's done. So let's take a look at another case study. All right. So say you go out, you killed the prop firm game, you have a nice track record, and you are going out and you've raised successfully $10 million. Okay. So same as before, your target is 20 to 22% monthly return. So, you bring in just over $2 million. All right. After the 8% preferred, you also usually want to throw in a 2% catch up fee, so basically the investors are paid out, they get their 220 grand. So that leaves, just under 2 million, 1.9 million and some change left to split between the general partnership and you. So that's after 1 month. All right. You could split that however you want, like I said. So that is the power of a fund. You're able to just scale and scale and scale. Excuse me. And just make a ton of money, as you could see. So these are the two primary ways, prop firm trading, and then, moving on from there, putting together an investment fund that people really build their wealth in this industry. And then from here, which I'll make videos on later, but, you could put your money in real estate, all kinds of other stuff. So now, like I said in the beginning of the video, right, the thing that I know I did not think about in the very beginning, because I'm just like, man, I'm just trying to get paid. I want to learn these strategies. The last thing that a lot of us think about is taxes. All right. So how do you go about paying taxes? More importantly, how do you protect the money that you make, this skill that you took so long to develop and learn and perfect, and now you're making consistent returns, and you don't want to give all that away, right? Or most of it away. So the best way to protect your liability, but also protect your funds and your profits, is to form a business entity such as an LLC, specifically an SCorp, and report your revenue through your business. Okay, so a good advantage of this is tax write-offs. You could write off virtually anything, right? Mortgage, rent, gas for your car, food expenses, car maintenance, internet. I mean, your regular utility bills. Not all the time, but if you go out, treat somebody for a nice dinner, and you could write that off. You could write off vacations. I mean, just all kinds of stuff, man. So that is definitely something that you got to do. We're going to dive in on the next slide. So an S Corp. All right. What is an S Corp? An S Corp is a tax election. All right. So it's not to be confused. It's not a separate entity apart from an LLC. An S Corp is simply a limited liability company with a special pass-through designation given by the IRS, which means that they will not be taxed twice, which is what a standard LLC, what they get. They get that double taxation. So the S Corp, you only get taxed once because the income and losses pass through to the shareholders, which would be you, and you only pay taxes on your personal. All right. So the shareholder, which is you, pays yourself a reasonable salary, and that is taxed. Okay. The remaining income, which is dividends or bonuses, pass through tax free. So the rule of thumb on that is pretty much you want to do the 60-40. All right. So to avoid any suspicion by the IRS. So that means that whatever you take in, 60% of that you pay yourself as your reasonable salary. And that is what is taxed. And then the 40% you pay yourself through as dividends and bonuses, and that passes through untaxed. Okay. So what I've used to form, my LLCs for trading, for other investing, I've gone through InkFile. All right, I'm not getting any kickback off of dropping this link in here. I'm just sharing it because this is what I've used, and they've been good to me. You get good alerts on your phone, your email, whenever you have to file your quarterly taxes or any other legal documents, they'll remind you. So let me see here. So yeah, this is the homepage. So you just click on Start My Business, entity type, S Corporation, state of formation, and then wherever you're at. So, the caveat here is, either you or, one of the majority owners needs to be in the United States to take advantage of this. If you're foreign, then you'd want to seek out some legal advice on that. I'm not qualified to drop any gems, unfortunately, in that regard, guys. So, But yeah, that if you are here stateside or know somebody who is going in partnership with, then that is definitely the way to go. And they are very affordable. I think that will run you maybe $150, $175. And they take care of all the paperwork for you. So it's a really great investment considering all the money that you'll save in the long run. And you could write that you could write that off as well as a business expense. All right, last case study, y'all. I promise, last one. So let's go back to that FTMO example. So let's say month one, all right, you killed it. You got $15,000 in the bank. FTMO's paying you out. All right, so with an SCorp, you could say, hey, 60% of that I'm taking as a reasonable salary. All right, so you have your reasonable salary, which is $9,000. Okay, and also because now you're a business owner, you could write off expenses as we talked about earlier, your rent, other payments. You could even write off paying yourself. Okay. So let's just say, conservative estimate, your write-offs for that month is $1,500. Okay. This would bring your taxable income down to $7,500. Okay. And then based off of this number, $7,500, you are in the 24% federal income tax bracket. So your tax bill for that month would be $1,800. Okay. So same example, only if you're just saying, hey, I'm trading just a trade, man. I'm just free flowing out here. Forget the legal stuff. I'm going to take care of it later. Okay. So month one, 15,000. So because you have no pass through entity set up, whatever you make is your salary. All right. So your salary is $15,000 that month. All right. You have zero write-offs because you're not a business owner. So your taxable income is also $15,000. All right. Because you made this, you fall into a higher tax bracket. And so now your tax burden is 32%. All right. So your bill is $4,800, man. That's crazy. $4,800 for doing the same work. Think about that. Doing the same work. You didn't do nothing different from this example to that example, but you have to pay $3,000 more dollars. All right. So this is the importance, guys, of once you learn this skill, you have to treat it like a business because that's what it is. You are a business owner at this point. You are an investor, and you need to make sure that you are taking care of yourself, taking care of your family, and making sure that you're not overpaying in taxes. All right. Save as many pennies as you can from this hard-earned skill. All right. And that's it, y'all. Go make some money, man. Go make some money. All right. I'm happy that I got to share this with you guys. There's a lot more nuances, especially if you're interested in starting a fund. Man, I have some great resources for you and can connect you with some really interesting and successful people in that space. So if you have any questions on prop firm trading, on LLPs, on starting up an SCorp, anything like that, anything that we went over in this video, shoot me an email, guys. Shoot me an email, freetradingquestions@gmail.com. Hit us up on Instagram, Free Trading Academy. Shoot us a DM as well. I'd love to hear your feedback on this, and I really hope that this helps catapult a lot of you guys to the next level of your trading career. Okay, peace out. Happy trading. Thank you for tuning in. All right, have a good one.